we are in corporate financial management. We have at least here 8 chapter. 8 chapter means financial objective and requirement, source of finance, 3 share and loan capital, 4 capital structure and cost of capital, 5 working capital management, 6 capital investment appraisal, 7 business reorganization, 8 international aspect. So total we have 8 chapter in our syllabus, and within 8 chapter we have 52 topics. So these 52 topics we will cover, and also we will solve the previous question. And we have a lot of question and previous questions, I think not repeat in our exam, but we should try for our best so how to understand this chapter. So first of all, the module. So today we are going to discuss financial objectives and requirements. It is your first chapter. So within first chapter, we have to understand the financial objectives of the major type of organization. So we know there are a lot of different types of organization. We have public, private, limited companies, statutory companies, trust, and other companies limited to the grantee. Different types of company we have, and also determination of financial requirements and their impact on business planning and decision making. The application of financial principles within a corporation to create and maintain value through decision making and proper resource management. It is true that if we want to go for business, we need finance for survival of the company or running the company. So for decision making, for collecting the finance, there are different sources we have. We'll discuss later on. Here within an organization, there are some management. One is top management, another middle management, another first line management, who are really work. So top management, they give the long-term plan. Mid management, they are executing through the standing short-run plan, a single-use short-run plan, etc. And first-line manager, they use the policy procedure based on the budget. So here, if we see that sound financial management is an integral component of any good business strategy. So need the strategy for running the company. Here if we see in left side, here corporate level require the corporate strategy. Business level, we are using business strategy. Functional level, we are using functional strategy. Operational level, we need the operational strategy. So based on the strategy, company run, company survive, and going concern issue, we can think this way. So it is more than an enable for the overall plan and can be a competitive weapon. A strategic vision must combined by the understanding of how it will generate financial value. Financial management, our subject is corporate financial management. So here have the management, corporate structure, we have the management issue, we have the finance issue, all will be the combination. Here financial management is a concern with the maintenance and creation of economic value or wealth or responsibilities and activities for financial managers. And responsibilities of financial managers are acquiring fund needed by a firm or company, that directing those fund into project that will maximize the value of the firm for its owner. So that type of objective, we have different types of objective. One is financial objective. So if we see the financial objectives related to the financial objective in organization, that is profit maximization, sales growth, that means positive growth, improving market share, increasing productivity, and social and ethical responsibility also we have. That means related to the organization being a corporate citizen, for no environment or that is social responsibility. For here body shows support of animal rights. That means we have the social responsibility. We have to see our other stakeholders. Service objective we have, it is related to the organization's desire to provide a service, that is service to customers or the community. And also we have the environmental objectivities and related to an organization's responsible resource use and environmental effect of their activity. That means waste and emission reduction. For example, ইটের ভাটা, এখানে টাইপস অফ অর্গানাইজেশন স্ট্রাকচার ডিফারেন্ট টাইপস অফ আছে, লাইন ম্যানেজমেন্ট, লাইন স্টাফ ম্যানেজমেন্ট, সিম্পল, ফাংশনাল, ডিভিশনাল, প্রজেক্ট বেস, ভার্চুয়াল, সেটা ডিফারেন্ট টাইপস অফ organizational structure we have. So here the financial objective of the main types of organization. So financial objectives is classified those that aim to make profit for their owners. There are some companies, their main aims or objective is to make profit for their owners. Another one aim to maximize benefit for society, and another maximizing benefit for their members. For example, our Institute of Chartered Secretaries of Bangladesh, this institute's main is also an organization. Its main objective is to maximize the benefit of the institute's members. Here, types of companies. The types of companies, there are different types of companies. We know statutory companies, it's limited company, some limited company, some unlimited company, limited by share, limited by the grantees, and one person company. Also we have just amendment of Companies Act, recent amendment, and one man company or one person company. So also we have the private company, public company. We have through the listing side, we have listed company, unlisted company, we have the trust, all are the company. And for example, if you want to go for public, you have to convert your company as a public company. That's why if you go for IPO, you have to convert your private company into the public company. So there are all types of different types, and each have the specific criteria. So public limited company is separate legal entities. All limited companies are separate legal entity, and public limited companies share are easy to transferable, but private limited companies share we can't transfer easily. We can offer for sale, and perpetual succession, higher scope for expansion, wide legal capacity sector. So if we see the public limited company, what is public limited company? A public limited company is a form of business organization that operates as a separate legal entity for its owners. It is formed and owned by the shareholders, and also public limited company. Share of public limited company are listed and trade at a stock exchange market freely, and that's why that share is called the quoted share. Quoted means we can quote in the capital market or secondary market. We can quote for purchase, we can quote for buy, etc. That's why it's the quoted share. Quoted share means the listed share, and shareholders of a public limited company are limited to potentially lose only the amount they have paid for the share they own. Financial objective of public limited companies. The main goal of virtually every public limited company has always been the maximize shareholder value by generating as much profit as possible. However, many companies have begun to balance the primary objective with their social and environmental goals that help appease stakeholders and keep produce the profit. And private limited company is a type of private limited company. Number of shareholders maximum 50 and minimum 2. So a private limited company is a types of privately held small business entity. This types of company that offers limited liability or legal protection for its shareholder, but that place certain restriction on its ownership. These restrictions are defined in the company's bylaws or regulation and are meant to prevent any hostile takeover attempt. So major ownership restrictions are shareholder cannot sell or transfer their share without offering them first to other shareholder for purchase. Shareholders cannot offer their share to the general public over a stock exchange. So it is the restriction for ownership private limited company. So it's if you see here, it's owned by an individual, owned by group or individual, can be owned by a corporate entity. Also, one-man company is owned by an individual. The financial objective of private limited company, its main objective is profit maximization. Financial objectives of private limited companies: first, profit maximization. If there is one area where public and private companies overlap, it is their desire to maximize profit for their shareholders. In a private company, this profit are restricted to the company's core set of owners, which may be just one person or a small group of interested stakeholders who have interested in the company, and also choosing the organizational structure. So organizational structure may be different types of what we have seen here, that the different types of structure can be line management, line staff management, functional management, divisional management, project-based matrix, virtual or organic or simple, etc. Different types of structure may be chosen and restricts to access statutory companies. So statutory companies from the government to provide a public service. The statutory companies are also named as statutory corporation, public corporation. These are actually public bodies established and operated by the government authority. So in our country, we can say we have different types of company. There's a statutory company, a company formed and regulated by the Special Act. It's the statutory companies. In our company, WASA, DESA, etc. Trust. A trust is a relationship whereby protect is held to one party to the benefit to another. So trust, this is the financial objective of a trust. A trust agreement is document the special trust for your etc. Okay, then companies limited by grantee. A limited by grantee company is a types of incorporated business structure that is predeterminedly use non-profit organization, social enterprise, etc. or charity. Now, determination of financial requirement and their impact of business planning and decision making. A business plan provides direction, gives us to track in the usually requirement when we seek finance. So, depending on our business type, our plan could include the following point. So, if we see here the business summary, that means every company need the business plan. So, if you see here, look here. Executive summary is the final one, is the top page. Then within that we have the mission statement, company's background, product description, and or service description, our that marketing plan, competitor analysis, SWOT analysis, operation, financial planning, timelines, etc. So every business need the business plan. It would be within one piece, and about the business we have to understand what is the total business structure. We have to understand our market, understand our future. We have to understand our finance. And what is business plan? Business plan, we have to define goals. We have to determine objectives to each goal, access resource, and make decision. We have to create contingency plan for managing changes, rationally access operation, feasibility, and financial objectivity. So here, mission. Every organization has the mission and vision, has the goal, measure business objective, strategy, practice, project, tasks, etc. And within our finance, we have to understand the capital. So what is capital? Is the stock of asset that will generate a flow of income in the future. And we are determining the capital budgeting. And capital budgeting is the planning process for allocating all expenditure that will have an expected benefit to the organization for more than 1 year. You will see the capital budgeting in a separate chapter. And capital budgeting is the process used by companies for evaluating and ranking potential expenditure or investment that are significant in amount. So this is the capital budgeting item. We'll see it. And investment concept in our finance. Investment refers to an outlay of funds on which management expects a return. An investment creates value for shareholders when expected return from investment exceeds its cost. So making decision having significant future benefit or cost for various entities and their stakeholders. Why investment is made? We are investing in capital, that means capital expenditure refers to a long-term commitment of resource that provide future benefits to business. And why investment is made? We made the investment because expansion plan, growth strategy, capacity increase of the efficiency of the manufacturing facility, developing a fixed asset, copyright, franchise, licensing, increase the efficiency of the manufacturing facility. We invest because we have to develop a fixed asset, copyrights, franchise, license, patents, and establishing new brand, new line of business, new product, and opening new office, new factories, overseas branch. That's why we invest in fixed or capital expenditure. And capital budgeting is we have to see finance manager is concerned with planning and financing investment decision. Financing decision refers to determination of amount of long-term finance and decision of source of finance, etc. That's why we will work for cost of capital, weighted average cost of capital structure, ratio analysis, operating leverage, financing leverage, etc. So investment decision, also termed as capital budgeting decision, involve cost benefit analysis. Investment decisions are based on careful consideration of factors like profitability, safety, liquidity of the organization, and solvency, etc. So capital budgeting decision, cost reduction decision, should a new equipment be purchased in order to reduce cost? It's also capital budgeting decision. Planned expansion decision, should a new plant, warehouse, or other facility be acquired in order to increase capacity and sell, capacity of the production and sell. Also another equipment selection decision is also capital budgeting decision. Would machine X or machine Y or machine Z be the most cost effective? That should be chosen. And lease or buy decision also. Should new plant facility be leased or purchased? Equipment replacement decision is also the capital budgeting decision. Should old equipment be replaced new one, or now or later? Scanning decision, preference decision, financial requirement. So our financial requirement we can segregate, or we can divide in three types: short term, middle term, long term. Short term we can take from bank credit, also customer advance, trade credit. Fewer we are using from within the organization, that means our working capital, also we can use it. And if you see midterm financial requirement, we can issue the debenture, issue the preference share, can take the bank loan, can take the public deposit, fixed deposit, can take the loans from financial institutions. And long term, we have to issue the share. Long term financial requirement, we have to issue the share, issue of debenture, etc. So shareholders wealth maximization, our financial decision area is investment analysis, working capital management, source of cost of funds, determination of capital structure, dividend policy, analysis of risks and return. Also all are the one of each and every one is a chapter. So investment analysis, working capital management, source of cost of capital, determination of capital structure, dividend policy, analysis of risks and return for the organization is the financial decision area. And these decision areas support primary disciplines. Some here support our accounting, economics, micro or macro, and also other disciplines support that. That support is marketing, production, quantitative method, etc. And result, shareholders wealth maximization. So if we do all things, then our shareholders wealth would be maximized through the financial decision, implementing the financial decision with the support of primary and other discipline. So it's the shareholders wealth maximization. And organizational structure, specific the role, reporting relationship, and division to responsibilities that shape decision making within organization. So look here in left side, a strategy. If we implement a strategy within the organization, where we have the organizational structure, need the management control within a culture, organizational culture, with the human resource management, using the human resource management and overall strategy. If we implement within the organization, we get the proper performance of the organization, where we object is to find an investor, get a business loan, or just improve the way we run our business. Our business plan must answer this key question. We have to remember there is no right or wrong answer, but addressing this question help us build a roadmap for our business. And of course, the better the map, the greater the linked likelihood and we'd reach our destination. So corporate financial activity, it has three types. One is capital investment, capital financing, dividend and return of capital. So corporate financial activities and capital investment within the corporate financial activities, decision where project acquisition to invest in on the highest possible risk adjusted return. We should choose that project or that work where we have to earn the highest possible risk adjusted return. Corporate financing with the corporate financial activities, we have to determine how to fund capital investment and optimizing the firm's capital structure. That means debt equity ratio. Capital financing within the corporate financial activities, we have to determine how to fund capital investment, optimizing the firm's capital structure. And dividend and return of capital, we have to decide how and when to return capital to investors. So it is our first chapter. In first chapter, we have seen corporate financial management, the financial objective of the main types of organization, types of companies. We have the public limited company, private company, financial objective of company, corporate social responsibility, private company, etc., statutory company, trust, financial objective, and just basic understanding for here. Now we're going for chapter 2. So we have finished chapter 1, is the totally theory, chapter 1. Now chapter 2. Look here, this is the chapter 2 or module 2. Is the source of finance.